This episode is brought to you by Trump Mortgage.
Good day. I'm Abby Overton, and this is The Real Deal. At the top of the news, a housing court judge says Swig Equities cannot evict its market rate tenants. Corcoran is going to charge its brokers a $1,500 yearly marketing fee, and the Blackstone Group is looking to raise $4 billion in an IPO. That and more on the Real Deal webcast. But first, some highlights from the Real Deal's third annual forum at Lincoln Center's Avery Fisher Hall, which played to a sold-out crowd last week. The forum drew more than 3,000 people and touched on important themes to the New York real estate industry, such as future plans for Madison Square Garden, the fate of hotel condos in the city, and one economist's doomsday predictions that real estate prices could drop 50%. Here are some highlights.
Well, I'm known as a bear for the long run.
I think the writers have been trying to scare a lot of the buyers for some time, talking about a housing bubble.
Well, I think it's pretty clear that there's never been a better time for real estate development, probably in the history of the city of New York.
That the condominium market is either falling or slowing down. It's the office market has risen so dramatically.
And right now, the problem in the super luxury market is there is no inventory. It's very lean.
To see more, click on the link below. And now for the news. A housing court judge has dealt a blow to developer Kent Swig's plan to evict 23 market-rate tenants from the Sheffield 57. If the ruling is upheld for the condo conversion at 322 West 57th Street, developers will not be able to evict market-rate tenants while a conversion is in progress, even if their leases are up and have not been renewed. Swig will appeal. He said, "The law is black and white. If you don't have a lease and you are not rent-regulated, then you have no right to occupy." The Corcoran Group has started charging its agents an annual $1,500 marketing fee. The move is part of a national trend that puts the onus on real estate brokers to help foot their company's marketing bill. The fee will come out of the broker's first commission checks of the year in increments of $500 or in one lump sum. After all the takeover activity last month, the Blackstone Group is in the news again. They have filed for an initial public offering and are seeking to raise $4 billion. The company will be renamed Blackstone Holdings and said in its filing that it had earned over $6 billion in the past 5 years. Earlier this year, Blackstone acquired equity office properties in the largest leveraged buyout in history. The average price for a Manhattan apartment rose by nearly $1 million in the past decade, a threefold increase to $1.3 million. According to a report by appraisal firm Miller Samuel, the rate of growth at 6.1% in 2006 was still slower than the previous year when sales prices rose 21.6%. The 2006 growth rate for Manhattan apartment prices was one of the lowest since 2002. New Jersey-based REIT Matt Cali Realty Corp. has bought an interest in an office condominium at 125 Broad Street for $273 million or $520 per square foot. The previous owner, SL Green Realty Corporation, acquired floors 2 through 16 in the 40-story property in 2002 for $90 million or $172 per square foot. The once popular hub for music songwriting and publishing in the 1950s and 60s is on the sales market. The Brill Building at 1619 Broadway is being sold by its owners, Murray Hill Properties and Westbrook Partners. The joint venture expects to get more than $140 million for the 175,000 square foot office building, or $800 a square foot. The partnership paid $98 million for the 11-story building last October. High-end fashion retailer Barney's New York is looking to expand. The company is considering leasing the entire 60,000 square foot building at 401 West 14th Street in the Meatpacking District. The new location would be Barney's second largest in the city, according to Karen Bellantoni of Robert K. Futterman & Associates, one of the brokers for the space. Joseph Moynihan has abandoned plans to convert the pre-war office building at 60 Madison Avenue into residential condos. The 200,000 square foot building was slated for conversion until 6 months ago. The decision was motivated by the way the condo market's going and the way the commercial market is going, said Daniel Gohari, Vice President and Director of Commercial Assets at the Moynihan Group. Development firm SDS Persida has announced the purchase of the parking lot at 405 West 53rd Street for $32.2 million from Con Edison. The new owner plans to build an 85-unit luxury condominium designed by Smith Miller and Hawkinson Architects on the 34,782 square foot site. The project will include 9 triplex townhouses with underground parking and outdoor courtyards. Manhattan-based real estate developer Teragon Corp last week announced plans to spin off its core home building division. The company said it lost $25.1 million, or 89 cents a share, during the fourth quarter. Though revenue rose 7.8% to $163.8 million, home building sales fell 14% to $148.5 million. Teragon officials said the company is shifting its focus to the rental market. Barely a week after their move to Brown Harris Stevens, 4 former Corcoran brokers announced the launch of their new partnership. The newly formed partnership includes Wendy Maitland, Aaron Aries, Wilbur Gonzalez, and Reed Price. They have brought along 14 former Corcoran brokers with them as part of their residential team. The new marketing group, not yet officially named, will take high-end, design-driven new developments from concept to completion, said Maitland, one of the 4 managing directors. Thank you for joining us for this edition of the Real Deals webcast. Please join us next week for the latest real estate news. I'm Abby Overton, and this is The Real Deal.